Welcome to it right here at the JSE. The Aussie down 0.5%, led lower by the financials that are down 0.8%. But let's have a look at what's going on in the Asian side. We had the Asia Pacific stocks slipping for the day. And of course, we do know that the major markets in Japan and China are closed for a public holiday. However, the Hang Seng Index in Hong Kong was the one that was the loser regionally, down about 1.2%. Of course, investors on that particular side of things are looking at the COVID situation in India as the country continues to battle the deadly second wave. When you look at markets in the European region, we've got the UK markets that are closed for the day. However, when you look at markets and the performance in Germany, the German DAX up 0.6%, and of course the French CAC up 0.6%. Looking at the US futures moving a little bit higher on the day. Hopefully we might see a little bit more clarity when the markets on that particular side start to open. Locally, we've had a string of corporate news, a couple of trading updates, as well as MTN Nigeria reporting their quarterly figures. But to talk to us about how exactly all of this is playing out entirely, we are joined by Gary Boyson from Rand Swiss. Gary, thank you so much for your time.
Yeah, thanks for having me on the show.
So, let's look at the current performance on the JSE thus far, taking stock of what happened last week.
So I think as you said, we've got a lot of volume coming out of the market today, just with the string of public holidays across Asia. We did see the S&P 500 closing slightly lower on Friday, in spite of very, very positive economic data and very positive corporate earnings. Most of the big tech companies reported last week. Most of them have beaten expectations. The S&P is kind of hovering at all-time highs, but just pulled back a little bit on Friday. We're kind of trading quite mixed today. We've got, along with, as you mentioned, the financials, we've also got the resources under a little bit of pressure. We have the likes of Anglo American Platinum, Impala Platinum, both down around 2.5%. The one sector that does seem to be bucking the trend is the retail sector, with the likes of Clicks and Mr. Price both up around 1%. So it's kind of a mixed bag day today. I think everyone, as you said, they're kind of looking at those vaccine statistics, and they're looking at what's going on in India, and they're just wondering how this pandemic is going to play out.
We have the Moody's credit ratings review after markets close on Friday. Do you expect it to have any material impact on the Rand?
So it's interesting. So Moody's has got us on BA2, which is essentially 2 notches below investment grade. The big news around whether or not we were going to be downgraded really had to do with us crossing that barrier from investment grade to junk. And while the ratings agency does have us on a negative outlook, so the expectation is that we will move 1 notch further into junk at some point in the future, it does seem that market consensus is that there's going to be no move on Friday, and that they're going to give us the benefit of a doubt, and we probably will stay with a negative outlook. And Moody's just highlighting the usual problems, the problems around the electricity supply. We've obviously got those negotiations between the government and Eskom coming up. Obviously Eskom employees looking for about a 15% increase, which is significant. And obviously, the debt burden for Eskom still hanging over the parastatal. So all of that we expect to be concerns highlighted by Moody's. I do think we'll avoid a further downgrade into junk, especially given the kind of fiscal constraint that we've seen in a very difficult time from the budget policy statement that we got out earlier in the year. Obviously, in October, we're going to get the mini budget, and as long as we, I think, show some fiscal discipline into that, we might avoid a further downgrade. But how this is going to play into the currency, I don't think it's going to make too much impact. If we get what the market's expecting as a no downgrade, you might see a mild strengthening of the local currency. But even if we do get downgraded, I don't think it's going to make too much difference. The currency traders really seems to be focused on the dichotomy between emerging markets offering a little bit more yield than developed markets, and a lot of our currency movements is being driven by the foreign components of this. So a lot of it, in terms of the rand-dollar pair is coming from the dollar weakness, the strength in our currency, rather than rand strength, if you want to put it that way.
So this week we're expecting speeches from the Fed chair, as well as the Fed presidents from San Francisco, Minneapolis, Chicago, Dallas, etc. Do you think investors are going to be listening to some of these speeches, hoping for clues on U.S. monetary policy?
I think we're always looking for clues on U.S. monetary policy. It's such an enormous driver of financial markets these days. In spite of the Fed, essentially telling us that, asset price inflation is not an issue. The idea that all the loose monetary policy is fueling this enormous rally in financial assets is really not a concern. I think most people are looking to see whether what the next moves are going to be. So we did see the Dallas Fed kind of breaking ranks with the traditional line from Jay Powell, saying that they are seeing excessive risk taking in financial markets based on this ultra loose monetary policy, and kind of started to hint that there might be some sort of tapering to that bond purchase program. That obviously will take the shine off markets a little bit, as a lot of people trade on the back of that. I think what we're also looking for in the speeches is just the idea that the inflation might not be transitory. So up until now, the Fed has been quite clear that they see all the kind of cost push numbers coming through as disruptions to supply chains. It's the idea that lumber prices are going berserk, copper prices are increasing dramatically. All of those kind of base commodity inputs rising as aggressively as they are should eventually subside and normalize. That's the Fed's official stance. Now, if that changes, and if we start to see that the Fed is concerned about rising inflation, and that feeds into the expectation that we might see a more aggressive taper and actually higher interest rates in the US, the markets will certainly respond to that. So I think you do need to be very, very cognizant of what the various Fed speakers are going to be saying this week.
Earlier on, you were talking about how investors are monitoring the vaccine rollout. As it continues to ramp up in various parts of the world, do you see that increasing oil demand?
Increasing oil demand, yes, it's difficult. So, looking at oil demand specifically, we're not quite back at pre-pandemic levels, but we're getting close. If you look at those vaccine rollouts, it's significant. If you look at the US, you're getting towards that kind of 50% mark where people have had at least a single dose, and fully vaccinated. You're almost at around a third of the US population. If you look in the UK, for people that have at least one dose the vaccine, you're now above the halfway mark. So we're getting towards that population immunity in many developing countries. We're also seeing in the emerging markets, the likes of Chile up to around a third of their population vaccinated. Brazil still trailing slightly. Obviously, we're seeing kind of the similar kind of spikes in infection rates that we're seeing in India and Brazil as well, but they're at about 7.2% of population. So, we are seeing this vaccine rollout progress, and I think financial markets are certainly looking at COVID being put further and further in the rearview mirror. Locally, obviously, we've had the J&J suspension lifted. And also, if you look at some of the informal analytic data, it does seem that we're not capturing the full infection rate in South Africa, and we might have more people that have been infected and have kind of moved past having the coronavirus and maybe closer to their population immunity than official statistics are saying. So while our vaccine rollout is obviously very, very behind, it could be a
All right, we seem to have lost that audio with Gary, but Gary, thank you so much for your time this afternoon. That is Gary Boyson from Rand Swiss, taking us through the day's market activity. Of course, we will continue monitoring those. We'll have more news after the show.